So I trade a lot with supply and demand, market structure, and volume price analysis. That's that's my my main pillars. So understanding what a trend is very important to know. So this is what an uptrend looks like. It's a series of higher highs and higher lows. You have a low, you have a higher high, you have a higher low, you have a higher high, and a higher low, and a high. Or, then we don't know what's going to happen after that. So, and then inversively, this is what your downtrend looks like, a series of lower highs and lower lows. We have a high, we have a lower high, we have a higher low, we uh we have a lower low, we have a higher low, we have a lower low. Okay, and so and then the third type is consolidation or range. Oops, I'll leave that up. So it'll look something like this, to where there is no higher high and higher low. It's just kind of going sideways. And it can also look like this. So um, these are the three basic types of uh, trends in the market, whether it's an uptrend, a downtrend, or a consolidation range. Uh, so what is so important about that is, like, when you're looking for an entry, right? You want to make sure you're not buying at a high. Like, you always want to have like that 50% rule. Like, you don't, buy low, sell high type stuff. So here, in order for to get any type of good, I guess, confirmation to go long, you would want to see it base. Like, so here we have another break of structure continuation. We have another high set in. It bases here. This holds as new support and continues on. Same thing for the downside. Uh, we set a low, and then we pulled back, and then we set a lower high. Right. I mean, it's all time frame continuity. And so here is your change of structure, your break of character. Sorry, break of structure right here. So your break of structure comes back and checks, break of structure again. So we do have continuation. So I like to see at least not just one move. I like to see a lower high, I'm sorry, a lower low, a lower high, a lower low, a lower high, and then, because if you're just going off of one, you really don't know, like, if you're just going off of something that looks like this, like, you don't know where it's going. Like, you don't, like, do you really feel comfortable buying something right here? Because you're awfully far away from right here, which was the previous support. So that's why I say that. So also, what can happen is this is a scenario. Something like this can happen, to where it'll come up and do something like this, and then you'll see your trend change here, or your change of character will occur here after the range has been broken. So we have this range here. Sometimes it sweeps above. It's not, exactly perfect, but then we have this break. Um, it fails to return to test this support. Sometimes it will test this resistance, because, like, once it breaks through, support becomes resistance, and so it'll sometimes just come back and check this, sweep it, and then if it doesn't hold, it'll come back down. Otherwise, it'll just fall back into range and then move out the other direction. Um, so it can look like that, or it can also look like this, to where let's see, it will do this inversely, like on a bullish reversal. So let's just hide this real quick. Uh, okay, so it'll do, inversely. This is what that looks like. Okay, so a lot of times people will also do things like, um, okay, well, that's a head and shoulders, or an inverse head and shoulders right here, right? But all that is market structure, right? It failed to break. Uh, it tested this low, came back into this range, uh, check this high. This is support, so we're in this range, and then it broke this area here for continuation and came back to test it again. Say hypothetically it didn't sweep. Let's just say it's, hang on one second. Uh, Shoot, hang on. What's going on? I don't know why it's doing that. Yeah, so let's say it didn't, you know, it didn't, it came back and then you have your continuation. And no, so this is why like the whole head and shoulders thing kind of works out into play with how traders do their thing, right? You have your shoulder there, your other shoulder here, and then this is going to be where your head is, right? And so that's where that comes from. That's where that like you know concept comes from. A lot of people don't realize that, but that's where it comes from. So, anyways, getting back to the market in itself, um, but one thing I will say before I go into that, let me hide all this stuff. Or, yeah. So one thing I will like keeping all that into mind, and one thing I will say is that I am a strat trader. So it's a concept. It's kind of like, well, it's not ICT, but it's a concept like ICT is a concept. So what that means is basically the basis. Well, the basis of the strat is there are three types of candles, and this is just being able to break down the anatomy of a candle and understand what it's doing and what it's giving you. So the first type of candle you have is a one inside bar. It's a candle that is like a consolidation candle, fails to break a high or a low, uh, and everything goes off of the previous candle, like you're referencing off of the previous candle. So the two is going to be a directional candle, or it can be a shift change or continuation. But twos are directional candles, and then threes are just outside bars or engulfings. And so what that looks like, just to kind of give you an idea, so that way you can visualize it, this is what it looks like. Um, so this is your one. You can see the previous candle that I was talking about. Your one is inside the previous candle, which engulfs the one. So basically, this candle is a compression candle, uh, and it's basically like a consolidation compression candle. These directional candles, again, it's either going to move either up out of this area here or down up out of this area here from the previous. Like here is when it becomes a two. This is exactly where it becomes a two. So you have your open, high, low, close, right? Let's say we opened here. This was our high. This was our low, and I'm sorry. We opened here. This was our high, our low, and we closed here. So we can look here and we could say, okay, so and then we also have to break down the anatomy of this candle, and that's a later thing. I'm not gonna get too in depth with that. But to say like, okay, what type of candle is this? Like what type of two is this, or what type of one, or what type of three is this in comparison to where we're at with this candle? Based on the 50% rule right here, let's say this wick right here is 50% of the midline of this previous candle. And so if you want to see some, uh, I guess, bullish momentum and strength by the wick below, Are you guys able to see it right now? Okay. So back to what I was saying, as far as the types of candles. So there's only three to keep it simple. You have your consolidation, which is your one, your directional candles, which are your twos, and then your range expansion candles or engulfing candles. All throughout the market, you should be able to spot them. Well, I mean, you can get like if you really want to get more in depth on what the strat is, I can go into that more. I can send you the PDF. But anyways, so the three is, yeah, like I was saying, directional, and the 50%. Like you got to ask yourself what type of a two is it? Is it a two with a wick, or like a shooter, like a hammer or shooter candle? In which direction is it headed? Even though it's a two, it could be a two up, for example, like up above the previous candle or down below. But you have to ask yourself, where is the body versus where the wicks are. So, anyways, the threes are the range expansion candles, the engulfings, and then that's pretty much the gist of it. I'm not going to go too much more in depth, but I'll show you more examples of what that looks like. So, right now, this is the weekly. You can see based on what I said earlier, as far as what a trend is, right? We have a we have a low. Let me. So we have a low here. And I'm just doing this on the weekly because it's just easier to see. We have the high here. We have a high. We have a lower high here, and we have a higher high here. Yeah, it's right here. And then we have, excuse me, and then we have a higher low here. Okay. And so, are you guys able to still see? Okay. So, um, that being said, and then let's just keep in mind that this is the weekly. So I'm gonna you know, uh, drill down as far as time frame continuity is concerned, because that's also very important when it comes to trading the strat. But looking at the previous week's candle, first of all, not the one that we're at now, we can see this bottom side wick here. You can see, yes, there's a possibility of it pulling back to this level here, or to actually, because the way the strat works, you're looking at the previous candle, right? So here, um, what I was saying before, as far as like you got to ask yourself what type of candle it is. Uh, this previous week had a two down, right? So if I turn the strat on, you will see that it's a two down right here. And I know this just because I'm able to spot, like I've been doing for a while, so enough to know. But anyways, what that means is it's, as far as like concept wise, that means an indication of a reversal, and you would trade that to the previous low. You could start targeting areas like this, here, or this bottom wick here, right? Because it's a 2-2. So we would anticipate, like, you could short something like this, or from here, this would be your trigger right here. You can put your stop at the previous wick there, um, or the 50% area of that, and then just start targeting areas like right here. On a 4 hour, it's going to look a little bit like more skewed, but really you would enter, yeah, you would enter here. I don't really like to trade off of because first of all, like I'm not swinging, these types of trades. So, but I'm just kind of giving you an example of how it looks like as far as targeting is concerned. So you could actually, this is what you would want to be targeting right here, on this candle, since this one here just is the one that broke down. So you would be targeting the previous third one, the what is it, predecessor. But anyways, let me delete all that. Okay, So, back to what I was saying as far as like the daily and how I traded it. There's another thing that because there is a range here, like we have a range uh, within the day, like the daily. So the previous high was, hang on, let me drill down even more. Okay. So yeah, the previous high was here on the daily, and then the previous low was right here. Okay. And then so if we look at the 1 hour, you can see that the previous high, what I'm getting at is you can see that the previous high has been ran, right? Before we had this happen yesterday, this is what happened the prior day, and this was the previous low right here. Uh, Actually, this was the previous low right here. So what tends to happen is, based on how I trade with broadening formations, is you'll see something like this. Let's see. Uh, it'll look like, what's the most recent? Let me see. Okay, so let me. Okay, so previously, like this is what we were dealing with right here. Is we had a high after this run up here, right? From this move here to here. When I see a lot of twos on the strat, I'm expecting a relief pullback, like a pretty deep retracement, at least 50%. And so this is why I also like to trade with a Fibonacci as well. And you can see how right when I turn those the indicator on it, it shot out exactly where the highs and the lows were. But what I'm getting at is when a broadening formation occurs, what you want to look for is you want to see, so you have a three. I like to trade off of threes. Threes usually happen at opens of the like usually around the open of the market. You can see that here again too. You can see that here again too. Okay. And I know this just because I've been back testing it for a while. Like you can see it here. It won't go that far back, but you can see it. And a lot of times you'll see it on the 1 hour. So that's what I'm looking for. Like I said, so I'm not typically I'm not wanting to trade that. I'm wanting to trade maybe like the third hour, and if not, I'm drilling down even uh, on lower time frames. But getting back to what I was saying is that we have a run of the highs, a run of the lows here. So we know it's taking out lows here. And so um, my anticipation was this. Okay, so it's gonna possibly either A, like shit the bed and come back down to this deep retracement here from here to about right here, this area. So, and the reason I pulled it like that is because that's when the move actually, I mean, you can even really go like that if you want. Yeah, that's even better. So I don't know if you guys know what Fibonacci is, but this is a tool that I use a lot. Uh, it's not an indicator. So basically, you have to know how to properly utilize it. So I was anticipating, okay, so since we ran this previous low that was right here, we made a high, we made a low, we came up when we ran this low. So I'm like, okay, so either we're just gonna get like shat on. There's gonna be a lot of profit takers, a lot of sell side liquidity that's gonna push us back down. And so I wake up the next day because it's been kind of going sideways, and then I'm seeing this three. Okay, and I'm like, okay, okay, there's a lot of volume. I like that. And so what happens here is, I think uh, if we look down even further, it runs the I'm not sure because I wasn't awake, but it runs the high and it runs the low. Okay, so you have a, hang on, I can be able to tell you if I, let's go to the 1 minute. Yeah, so it runs the high here and then it starts running the lows, right? So we have this run of the high first. So since we previously took out a low, it ran the high. So this previous high was broken, right? So we can anticipate, either A, it's going to break in base and do this continuation like this, you know, and then test this again and then move again on the upside. That obviously didn't happen. That's why I was saying to, pay attention to like what type of three it is, or what type of candle it is in general. So back to what I was saying, we ran the highs, so you can anticipate, especially at these levels, like, do you expect like to have an expectation that the market is after this gonna keep doing this number? Like, it's very very unlikely for it to do something like that. um Not saying that it doesn't happen, but if it were to happen, my question is, where would it happen and how would it happen, right? And so that's why I use this tool. So and I'll also trade off of the like, again, I like to look for the threes. I'll trade off of them. I'll start drilling down on the lower time frames, beginning from the hourly. I'll look at the daily, and I interchange between seeing what the 4 hour is doing as well. So we can see that the 4 hour has a 322 reversal on the 4 hour, but this three basically like swept everything high and low, right? We placed this high here, and then now we're running lows currently, and that happened towards the end of the day. Um, and you can see, so after we ran this low, actually came into my, this is, I actually modified this Fibonacci tool to put the midpoint of the golden ratio, which is right here, uh, of that. And so, I mean, if you wanted to even get tighter and say like order blockwise, do something like this, right? And then, and then I put this number here for my stop. So, um, you can see how it wicked back up after it ran this low here. So this was after it ran this high. That was right here. It came back, ran this low. Had a lot of buyers sitting right here. So what am I anticipating next? Either a pullback to the downside from here, the 50% retracement. So I would say from here to here, it's going to be approximately right here. So the way I pull them, if I want to go down, if I'm trying to short, I will pull from the bottom to the top and vice versa. So being that this it came back here, but you can see all these wicks right here as well. All right, we're still looking at the 1 hour, so like we have time uh, to still keep shorting this from after we ran this high. So looking at it this way, like this is what's called a 3-2-2 reversal. So we have a three and then an inside, actually 3-1-2. So we have an inside bar, which is the one, which is what this is right here. This one, it's inside uh, of this candle, and then we have a two. And so your trigger could be something like, if you're just trading strictly off of the strat, like your trigger could be here, and then your target could be here. Or you can start targeting the body. If just depending on your risk tolerance, we can target the body, and then your stop can be it's all dependent. It's all time frame dependent as well. Your stop could be like at most, I would say right here, at maximum for max pain right there. But you could also set your stop here. Uh, but yeah, or you could also set your stop here. So your entry would be this trigger here, to this trigger up, uh, and then your profit taking would be targeting this level here, top of this three. And because it ran that low, I'm not saying it always happens, but you know, um, with the amount of uh, volume that there was yesterday, it was very well possible. And also, if you look at the ATR, I always pay attention to average true range, like how far is this motherfucker going to move within one day, and where are we, and how far has it moved so far. So I'll also pay attention to that as well. Um, and so it did run this here. Um, I think most of the day I was shorting for the most part. Like so I was shorting in this area here. I think it was more so on the 15 minute and the five, like looking at the 5 and the 15. So I was trying to short this right here. And so when I saw it run this, and then I saw this two down, um, this is the kind of area that I was considering. Not to mention, let's put the let's just throw all these on so you can see. Okay. And then where's the other one? Okay. So these are my levels, right? So looking at them, I've just this is just how I draw my levels. So you can see here, hit that low, came back up, impulsed out. Same thing here. And I have this one here as well. So, anyways, getting back to that. So I know at this point, where are we ranging? Like typically, where like so this is the if this is the broadening, where are we ranging currently? On this hour, this is your current range right here. So we're ranging here from here to here. Actually, I would say from here to here. So anywhere between here to here. And okay, so this is a good point I also want to put out there is that whenever you're taking a trade, like whenever I'm taking a trade, I keep this in mind. Like where is I like to call it the fair market value. Like where it's like a 50% rule of this candle, right? And so like if we're looking inside this range here, right? Half of that is going to be well, half of that is going to be here. It's going to be here. So it's going to be right here. Is that right? No, actually, it's going to be right here. So, so typically anything above this is my rule. Like I'm not gonna be going long in this area right here, unless unless the time frame is in the condition of like the speed of my trade or the duration of my trade. Like if I plan to go long here and it be like a 4 hour trade or a swing, that's another thing. But if you're trading within 5, 10, 15, 20 minutes to an hour, 2 hour, however, like within an intraday session, like, don't get the hopes that like, okay, well, it's gonna come back because your probability, like if you want to speak probability, like anything above here, like anything above this area here, like right here, um, and you're trying to go long, like from where the actual move happened, like you're already up there. So you're risking good 75% of this entire range. And the higher you go, the more you're risking. So if anything, if you want to go long in an area like that, you want to see it break in base and do something like this first, and then you know, here, and then again a trend. So that's why I was saying like I don't like to trade during all-time highs as much, is because there's not any data to the left that I can reference back to, right? Only on smaller time frames. So if you are planning to go, if I'm planning on going long, like this is, shit. How do I grab this thing? So, so I'm gonna go long somewhere here, right? So I'm looking for this area, right in here, or right here, somewhere in between. Uh, so getting back to what I was saying, so yeah, getting back to what I was saying, as far as like how I trade is a lot, again, with a lot of like the zones that I have and the strat. Uh, this right here was very interesting for me. Like this is what I was watching uh, yesterday. Like I was like really watching. I was like, okay, so it ran this low already from this previous low. Ran this. It starts taking this out. Starts moving up. Now at this point, I'm checking to see, okay, is it holding the zone? Is it holding the low, the target low, like the previous day low? And it does. And so if you're pulling that from here to here, let me delete this. Oh shit. Okay. So yeah, this was the bigger move that I don't believe happened. So if you're pulling that the Fibonacci from here to here, again, this would have been how I would have done it. If I'm going long, you start from the top, go to the bottom, and then bam. You can see where it starts to break up. But also notice that even though it does come back below and it swept the golden ratio, you also have to consider where it's at, like within this range. Like from here to here. This is like this entire area within here. This entire hair. This is the current range that we've been trading, right? We've been running the highs, running the lows, running the highs, running the lows, and then running the highs within this range here. And so, that's kind of what I was going off of, to look even closer at it, uh, and to remove let me see, let me remove this. Okay. So I'm also looking at the 5 minute as well. Um, and then so on the 5 minute, I think what I did was I think I might have, yeah, I was looking at going long, but I was like, okay, no, it's just not, yeah, it's just not. So, what happened is like I was looking for it to run the high. Like my game plan of yesterday was for it to run highs or run lows and then see for where it goes from there. So by the time I woke up, it ran this high, ran this low, and then so as it's approaching here, this is the area that I'm looking at shorting. Like this is right here. It was where I was looking at shorting. So let me see if I can do this. So once it placed like the high from this low, and it came back, okay, I'm saying, okay, so well, if it does hold, uh, the structure is kind of chopping on this area here on the 5 minute. So if I'm looking at it in a sense of like, okay, the strat, what's it telling me? Okay, so we and what's market structure telling me? So we have a high, we have a low, we have a high, we have a lower high, uh, a higher high, a lower high, and then a high. Comes back to test the low, puts in a lower high, comes back, breaks this here, and then puts in the lower low, which is right here. Um, so the trigger would have been to take this short, uh, really would have been back inside this area right here. And so the reason I say that is because, again, I like to trade off of threes. Uh, and if you look at the higher time frame, you can see how it's showing this sign of weakness here. So again, I like to trade off of threes. So what am I looking for? I'm looking for that three. Okay, so we have this candle here, even though it's a two up on this one right here. It's telling me, again, ask yourself what type of two up is it? Is it a two up with a lot of seller strength, and a high and a, like a shooter, which it is. And so, what's the next candle that I'm looking for? It can either be turn into a two, it can be a one, two, or three. So it can be inside this two the entire time. It can be a two up continuation, or a two down, or it could swipe both and become a three. So because that's what it did, it wicked up, it came back down. You see this pretty quickly. It being that it's on the 5 minute, um, it came back down, turned into a three. So right here is what I'm interested in, right? I don't execute off of straight threes itself right here. Um, but this is where I was shorting right here off of this previous break. So once I saw this two happen, so the two, it's gonna happen like right where the wick of the three breaks, right? So right there. So right there, it becomes a two down. That's where it initiates the two down. And then you can see, like, looking back right there, that it breaks structure. Like there's a change in the market structure right there. There's a shift, and so this is right here is where I was shorting. Okay. Um, and at this point, I wasn't really shorting off of any type of Fibonacci. However, I was looking at the Fibonacci's that were long, because, like, the reason, even though I'm shorting and I'm still looking at Fibonacci's that are long, is because I want to see potentially where buyers are going to be stepping back in, right? So right here is this is the area that they would potentially be stepping back in right here. Uh, if they were to step, like when I say right here, I mean, let me delete this. It's kind of hard to see. Okay, so what I mean is, after this break, uh, I was looking for uh, whether or not it would come back in this direction here, but it happened so fast, right? And if it did, it would have checked it, maybe came back here and then went back up again. It didn't happen. It happened really fast, like with the volume, you can see. Um, so at that point, is when, like, I just started trading off of that. To be honest with you, like, I think I had a set like this, something like this. I was moving my after that two broke, then that was my trigger, was like, I want to say, that's not right. Um, okay, so it was like this, and then I was looking to hit this. Like, this was my that was my target right there. Just to run this previous low here, or yeah, the previous low that was set here, or just to run this wick here. And so I didn't hang on that long. I didn't, but that's pretty much what. my 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 entry was, like where my entries were. And so it came back and never retested. I'm sure it did on maybe on a lower time frame. No, I just blasted right through. And so from there, I was like, okay. So at that point, I pulled the Fibonacci from this pullback here, and I was like, I think it was like, was it right here? Or maybe it was on the 1 minute. No, this is the 1 minute. Okay, so from there to there. And then let's delete this other one. Okay, so then I was looking at this area here. Um, and I shorted and I think I came out here. I exited like somewhere right here, and then I came back in again right here. Uh, and you can see where the 0.618 is. And again, I was trying to take out this area right here. So that's pretty much uh, the gist of how I trade. I use a lot of Fibonacci's. I use a lot of just being able to read the candles without this indicator on is a great thing. Like being able to point at a candle and tell you like, okay, what kind of candle is this right here? Well, this is a two up, right? This is a one. So if you look at these candles and you turn this on, you'll see that it's a two up and a one. And being able to see that happen and being able to see what's happening and where the next candle is starting to form, being that this candle uh, opened here, it wicked up here. So about 50%, you could have taken it, you know, short here and been like this as far as, if you want to do a fast trade. This would have been your stop. This would have been your entry, and then actually, I'm sorry. This would have been your entry, and then you're just targeting previous wicks from here. Well, I wouldn't do. I mean, you can move your stop into there, here, here. These ones here that are stuff like that. Here, you're targeting this area. Here, you're targeting these areas here. Uh, you want to expand it out more, it does hit those levels there. So, but at this time, like it's already 4 o'clock, so I'm not gonna trade that. It's too late. But yeah, I did trade this. From this initial pullback, I was seeing. Let me see if I did another one. Uh, shit. Um, yeah, but that's already too much time. I don't know. I noticed that really quickly. Does anyone have any questions? Does any of this make sense? Or typically though, let me see. Like typically, as far as like targeting is concerned, um, how did I pull that first one? Let me see. Oh yeah, so I pulled it from the 5 minute, from here to here. from this first pullback. Yeah. So it pulled back here, and then so you would enter here. So basically entering right here on the 5 minute. Uh, I was shorting from this break initially, like here, and then my stop was here because I just didn't want it getting above that level, getting blasted. I didn't have this 50% retracement at the time, but initially I was targeting this zone here. You know, due to time, you can see where that, you know, area of support is as well right there. After pulling the Fibonacci retracement from here to here, the reason I pulled it from here to here is because this was the really first hard pullback that I saw. That's typically why I do that. I pull them on the impulse to the first pullback. So from 0 to 1 was here, 0 to 1 here, and then golden ratio for the second short would have been right here. I like to do it at the or enter at the around the 559 area. Put my stop right here, uh, where the 441 is. I created that myself. A lot of times, what I've noticed with NQ or minis or micros or whatever, that you'll see the 0.618 work out a lot. So from this entry here, uh, I would have targeted to this area here. And so you can see that's a roughly a well, it's almost a 4 to 1 ratio, 3.83. Um, you could have taken it down to there. You could have also taken it down to I think it's the next level here. Can't really see what that says. I think it's 1.618 level, which was actually it aligns to where this support is right there. So you could take it. It all depends on how you trade. Um, Now, also, if you do use EMAs, like this is another way to trade with them as double confirmation. Um, as far as like, let's see, yeah, as far as like just knowing, well, this is a specific strategy that I've learned from somebody else, but you can see how the EMAs, like I use I'm sorry, the 9, 21, 50, and then the 200, and then VWAP. So like zooming in as best I can, you can see that it's running. It ran a high here because there was a previous high, and then here's a low. Ran a high. There's another low. It ran that low. Tries to run this high again. Comes back. It's still downtrending. Uh, but let me see if I zoom out a bit. So yeah, it's still downtrending at this point. But if you want to just strictly trade off of like EMAs and levels, uh, because of this low here, it comes like we saw that okay, it made this low, made this high, but looking out, like zooming out, we still haven't taken out this low here. Like there's still this. So you could say, okay, well, you know, it and it also didn't run this high up here. So we're kind of in between range from here to here at this point. So comes back, rejects, runs this low, and then we begin to run highs. And so once I also start to see this, this is on Thinkorswim, by the way. Like I don't use EMAs all the time, but I do use them as confirmation, like just double confirmation. So you can see how they all start to turn up. I think the 5 is, and I'm sorry, the 9 is the green, the blue is the 21, the red is the 50, uh, the purple is the 200, and then this is VWAP right here. So here again, you see where I pulled it from 0 to 100 or 0 to 1 after this switch happened. And it also hit, I also was using volume profile. I like to use that a lot. Like, so if I zoom out, you can see the volume pointing controls right here. And I've had this area marked, and it's very strong if you know how to use it properly. So I was noticing that too, and I was noticing that it did run this low. So what am I expecting? With this low volume, uh, and I see the switch, I start going long, and so I'm targeting the 1.272 area here, and then because of the fact that uh, you know, EMAs are still complementing each other. Like they haven't, they're not turning around and not switching. They're not like, just weaving back and forth. They're still in alignment. Uh, you could have taken it here as well. And the reason I have this here and you don't see anything on the left is because I'm using volume profile. So we're at the top of that right here. So no, yeah, the volume pointing control is down here. We're at the top, and then so this is going to be your range, your intraday range, and this is the 1 minute chart. Yeah, so that's a pretty big move with options, and that's what's really helped me a lot when it comes to trading futures is just trading options. Like I've been trading options for a really long time, a lot longer than I've been trading futures, and so it's really helped me. Um, and I hope everything that I've been saying has been helpful. Also, this is the golden ratio right here. So you could have t no worries. Yeah, I'm also recording this stream too, so that's no problem. So yeah, this golden ratio here, the reason I marked this area here is because I can start to see that. Um, oh, okay, okay, okay. I think it's because when I pull my browser out, it does that. Hang on one sec. All right, can you guys see it? Are you able to see the screen or? Oh yeah, yeah. Okay. So I mean, there's many ways to trade, obviously. There's ICT concepts. The reason I like broadening formations also is because it helps you from getting swept. Because ranges typically do run in a broadening, uh, engulfing uh, state, as far as structure is concerned. You can see up here, down here, up here, down here. It just takes a high, takes a low, takes a low, comes back, and then you're still sitting here. Okay, so where's this high going to be taken? And so it swipes up, takes the high, takes the low, takes the high. So we can either a like continuation to try to retest the high, or to try to take out this low before running the high again. If we do take out this low and we break below and it breaks at bases and uh, continues down as a higher low to a lower low, or I'm sorry, a lower high to a lower low, then we know that this is going to be somewhere around here. Is going to be the next area of support, or within the 50% area. And it does also, like I do keep in mind things like this right here, because I've seen this move happen so often in the market. It happens so often. Like you can see it, uh, especially on like a little bit higher time frames. You can see it better. But yeah, it just takes time with the 50%. Sorry, with the Fibonacci. So to give you a run through on how I pull them, I'll give you an example. Let me see. Actually, I think I have one already set. So Okay. So here's a example of what? Okay. I don't know why that's not showing. Anyways, let's see what this one shows. Okay. So this is an example. So this is on a lower time frame. I think this is on a 5 minute right here. It's gonna take me like way back. Okay. So just looking at the 5 minute on this area here. Uh, Again, I'm taking it from here, just from the impulse. Because if we drill down even further to the one, uh, you're gonna see that with the uh, like I also like I'll do things like this too, just to kind of because like you got to validate it, right? You got to make sure it's valid or is it valid or invalid, right? So where the initial move happened, where am I looking? I'm looking from here to here. Initially, I think I missed this right here. I wasn't too comfortable taking this one right here. I don't like to trade inside like supply or demand zone areas as much until they're invalidated or validated to where they're going to push out. Because I saw this with a lot of volume, I think it will show right here on the 1 minute. But so I was looking at this other area here because it had reached here, uh, made a support level here. It was from this first pullback of this initial run here, from here, because we have a pullback and it sustained. So the next move was here, right? Because it pulled back. It did this, like this was the first move, and then it pulled back, and then so here, and then so your breakout would have been right here. As far as continuation is concerned, would have been right here on that level, on that area, because you can see how it pulled back to here. If it was to pull back more, uh, it would at least have come back to here. But pulling that from here to here, like it never did that. So it obviously uh, held its support. I mean, as far as like when I say first pullback, I want to see the first down candle, the first red candle, or whatever you call it. So that's why I pulled it from there. So being that there was that momentum, I'm looking at okay. So I missed this move, right? So because I'm looking for like a 1, 2, 3 or like an ABC move. Okay. So so I want to see something like this, right? So this is typically like you have your low, your high, lower high, and then your higher high. So since that broke, I drew my fib from here, from the impulse. You can see this candle if I zoom in here. If I want to get a little more accurate, you can do that too, so you don't get swept out. Like you can be really like OCD about it and get it to where it's like right on the money. So um yeah, and then so this risk reward was yeah, it's 6.96. And so targeting, actually, I'm sorry. So targeting this level here, the 1.272 to this also aligns with where uh, supply is. from where the initial move was up. The reason I have this marked, this big area here marked, is because it's on a higher time frame. So if you look back, where'd it go? So that's why. Uh, Wait, yeah, that's why. So this is why. Like I had this area marked as far as like where the move was, like the previous high, and so this was on the 1 hour. Um, and then you have this move back down after it places this high again, comes out, takes out this low. Oops, and then comes, and then here we are. So, but yeah, that's just a quick example, not to, you know, just be yapping too much, but yeah, that trade itself, let me see. Yeah, just to that level, and it did hit that level. So, um, obviously it hit that. I think it might have, yeah, swiped back down. A lot of times you can target one, see where you can see how it aligns to where I pulled it to. It aligns right with that zone that I was looking at. Like I think it was like a 4 hour zone or something like this zone here. Um, and then 1 hour zone or whatever, and then it breaks out. And so where am I looking at exiting? Potentially right here, uh, because of this right here. Because threes are engulfing, and so you're going to see a lot of volume with them. Because if one candle, let's say an hourly candle, sweeps a high and a low, there's a lot of volume, and so there's a lot of potential for uh, high momentum or uh, uh, impulsive move to happen. Uh, a lot of times you'll see that around the threes, and so I like to trade off of those for one reason because like I'm trying to get the most profitable trade that I can and at the highest probability with volume in consideration to direction. Right. So like um for example, this three right here, it was not too attractive for me um because I mean there's volume behind it, but because it's basically like I said, you have to determine what type of candle it is, right? So this is like a close to like a doji, right? It's kind of like an indecision compression candle on both ends. Like it swept highs and it swept lows. People were getting chopped up right here, right? If you're looking at a lower time frame. Let's see, where was that at? It was right here. So this is the 1 minute right here, and so that's why I don't like to trade that. It's just too erratic chop. Like, and I can see that. So on the 1 hour, that's why I said it was not as attractive, because of that reason. Like, and I don't know where it's going, right? Like, if I start here, I'm basically 50% from the range of the three in itself. The reason I like threes is because threes set your ranges. Like, so giving me a three, I know that I can trade anywhere from here to here, right? And somewhere in between there'll be a breakout. But where am I going to trade? Where do I want to trade? Okay, what's my current candle looking like? My current candle is up here, right? If my midpoint is right here, the 50% based on like I was saying, the 50% rule, like I'm pretty much doing a 50-50 crapshoot because I'm at 50% on whether or not this will move up or whether or not it'll move down. Right? I don't know. I don't know that until it either breaks this low and then does opens up another candle and does a continuation two down or a reversal two up. It can be a two down or it can be a 1-2 up. So usually it occurs in a 3-1-2 or a 3-2-2 continuation or reversal in each direction. So this one was, and then so you have to consider your levels as well. Like, and that's why I like trading off of the threes, because a lot of times you will see, uh, like, um, like your successor candle, you'll have a strong move. You see, you have really strong moves after these threes occur. You see a three here, and then another strong move right here. And a lot of times, like, because I live in Hawaii, so it's really difficult for me to keep up with time. Here, here again, I don't really like this three. It's a compression kind of like, sweepy three. I'm not interested in that. Here also, this one here, you have to also realize that, you know, based on this three, from how I see, this is kind of a dangerous one though, to be honest with you, because uh, it's a three, and then it opens up as a two. But if you look where we're at, we are running a previous high at this point. Like we're running previous high. So like if you're already up here, do you really feel like it's a good idea to like your probability as far as your risk is, yeah, you're a lot more dangerous. So position to be in. But again, look at the time. This is after hours, so it really doesn't matter. Like you can snipe in between. But what I'm looking for, like this indicator doesn't go as far back, but I can just eyeball it and see if I can find you another three. Let's see. So okay, I think I found one. So yeah, so here's another three right here. So basically, I like this one though. The reason I like this one is because I'm seeing a trend here. You have a high, low, uh, a lower high, and a lower low, and a lower high. So for continuation in this zone that I have here, uh, I would like to see something like this. Yeah, or at least go to test this lower low right here. At least a retest of this, because because the reason I say that is because uh, it's trending, right? And so yes, we're all the way down here. Um, but because it's trending and because this was a previous day high, I'm expecting to run a low, which was this low here, this previous day low here. So I keep track of that as well, in which that did happen, and then it did make another leg down here to this area here. Or I mean, you can even go so much to say further. So like where I was saying that three began, where was it at? Where did I mark that at? Shit, where was that? Okay, it was right here. So yeah, so if I'm seeing that, right, okay, so it's trending. And so from here, let's take the Fibonacci tool. So here, okay, so let's say here from when the impulse begins, right? And I like to go off of right here. So um, this one's a little tricky. Like you can get wicked out, but also that's why like if you have a solid like because I need to adjust my my stop loss on my Fibonacci tool. The only reason I have it like this is because I like to keep it tight, and because if my entry, Well, I can explain that some other time. Like that, like that'll be another live. Yeah, yeah, yeah. So, basically, uh, how I pull it, like all you need to know is your 50% and then your 1.672. I'm not sorry, your 1.618 is your golden ratio. So here is where you are looking to short in this area here for more continuation on the downside. You see this area here. So it comes up, it wicks it. So you can stop out like, okay, so if I were to stop, like what's my max pain? You can say, okay, I could do because of the golden ratio, like you could enter somewhere in this area, but you want to see it move out. Your max pain can be somewhere right here or this wick here, since this was the actual uh, higher low, right? So once you see it start to pull out of that, because here it's yeah, it's trying to bounce, but then the really this two down uh was the trigger right here. Like if you wanted to short this, like you could either go off of the fib or you could go off of this two down here because so you have a yeah, this two down here. So the reason I say that is because it breaks the previous candle. You could target this candle here, or you could just straight up go off of the fib, targeting from here. I like to set mine again at the 559, and you could put it to here where the previous uh, lower high was, or lower high was, and then target the 1.272. That being said, also I take into consideration where my zones are. This one, this one, it failed it. Obviously, the reason I invalidated it because it did come back through, broke through, came back, tested, and then again, right here, you could have also taken it out right here of this area right here. So, um, but yeah, I mean, it all, and again, it all depends on the time frame that you're trading on. So, but that's what that looks like on the 15-minute as well. So you can see it broke this low here, this previous low here. Yeah, it's basically a mathematician that came up with the formula, Fibonacci, and you can see it in nature. You can see it oddly in the stock market, and for some odd reason that I can't explain, it seems to have high probability results as far as if it's done properly. Again, it works really well on trending days or on uh, yeah, basically days where you're trending or you're trying to target an area on a pullback. Like you're not, again, you're not just like saying blindly, oh fuck it, bro. Because see, this is what happens. Like is like okay, well, you can be a breakout trader, right? Okay, so well, let's say, okay, well, okay, so like, where's a good example? Like, say this level right here, right? And we're looking at a 15-minute, right? You say, okay, well, you start to see this move here. Oh, it's running up. It came back and it pushed up, and you're not looking left, but already you're up here, right? You're already up here, and it's pretty. I mean, it sounds like common sense, which it is, but when you're in the moment, sometimes your emotional self will take over. And that's like one of the most important things to, you know, um, but you have to ask yourself, where am I at? Well, guess what? I'm at a fucking previous day high. So, do I really want to go, do I really want to go long here? Like, I want to, okay, so like right here is a perfect example. And this is like intraday. Okay, so, oh yeah, okay, so it's breaking out. And no, it's just running the previous day high. Um, and so it's just, again, with the 50% rule range, like within the range, we ran a high, we ran a low. Now, what are we looking at next? We're looking at running another high. And then we're going to go test the low. The low didn't test, the continuation. Okay, so we broke out, came back, checked, came back, checked it. It held broken base. Okay, so okay, we're still good. We're still good. I guarantee you, if you have EMAs and you do use them, you'll see the how the confirmation as far as how it correlates, like, and how it will align with your market structure, how it works on that level. Like if you do, yeah, they're exponential moving averages. So it just takes the moving average of time and price over a set duration uh, on what the current is. Yeah, yeah. I mean, I don't know either, as you can see. Yeah, this day fucking sucked though. I'm not gonna lie. Like, what do you what if you don't mind me asking, what broker are you using? Oh shit. Well, what I'm saying is like, how do you, what ex broker are you using to short it with? Because I know there's a lot like Coinbase. I think you can only go long. Oh, okay, okay. Oh yeah, you did say that. Yeah. Yeah, bro. Well, the one thing I will say is it's difficult. And so they have these rules set for a reason, because if anybody could do it, then we'd all be making money and then they'd be losing money. So they have to place these, like, hard rules, because they do want good profitable traders, because if people are using their money and losing it, then they're at a loss as well. So they want consistent profitable traders. Why do you say why do you say that? More for beginners? Oh, are you talking about as far as like the company making money? Like when you say for beginners? Right. What's the max? Yeah, yeah, but I'm not sure. I don't know the rules. I used to actually, I did have trade with Top Step in the past, but I didn't know, like, I got to look over the stipulations as far as like the account sizes and what the rules are per account as far as drawdown, max drawdown, things like that. But yeah, there are. I mean, I like Apex a lot. Um, Even though there is a trailing stop, uh, it's not that expensive, bro. Like if you're able, if you're good and you're able to like maintain your account, like you know, like yeah, you always want at least two to one minimum. But for every one risk, you want to gain double the amount of what that is. Like for example, if you look at this, so if you look at this, if you look at these target areas that I've shown you, this is a 3.81, right? Uh, what am I risking here? Well, I mean, it depends on how many contracts you're going with. This is an 8 point. Uh, this is with the Strat indicator right here. So this is with Fibonacci. It's a 3.83 using the Strat and supply and demand market structure. Uh, you're looking at a 8.74 risk to reward. So you're like basically an 8 to 1. Like I was shorting this shit too, dude. Like right before market open. I think it was it was it? No, no, no. No, yeah, I did short this though. I made like 3:30 a.m. Yeah. 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 To be honest, like it really depends. If you're trading options, I would say earlier in the morning due to theta, especially if you're trading 0 day expirations. I would say anywhere between, I wouldn't say now, I would not say 9:30 Eastern exactly. I would at least give it to like 10:30 or 10 just to see, some type of candle closure. Like let something happen before you can see what you got to be able to like have some data. As far as futures, I mean, for me, like I've had pretty good results. My time around 6 p.m. Yeah, I think it is a lot less complicated than learning options. It's also a lot safer, um, because you're paying. Think of it this way, like you're paying a monthly fee rather than like, which will also keep you from over leveraging, and psychologically that will help you out a lot. It'll also train you to have like better habits, especially if you do trade with a prop firm, because there are rules, and if you don't pass those rules, you fail, and you have to reset. But still, even if you do have to reset, the amount of loss that you would take, like on you know, just at the end of the day, is it's only your monthly. It's yeah. It will no, you're not making deposits to the account like you're paying and getting funded, and so you only lose whatever. Like if you max drawdown, you blow out your account, you pay uh the reset fee if you want to reset it, and then you pay, obviously you're paying your monthly initial account fee, and then whatever the reoccurring is for that. Um, as far as I'm concerned, Jordan, yeah, Jordan is actually he knows a lot more about the Apex rules. I think he's one of the mods in here. Yeah, I've been trading since 2018. Um, so I haven't been trading the strat. Hey, how's it going? Who's talking? Oh, okay. You sound like you're eating. Yeah, yeah, it's yeah. So I mean, I have ADHD, so sometimes it can be really hard for me to explain some of my concepts. But I have been doing this for since 2018, and I'm more than willing to help when I have the time. Like right now, it's the weekend, I have time. I'm chilling, drinking a beer, whatever. But if Well, if anybody didn't catch this, I did record it, so I can send it to you and you can rewatch it. Um, yeah, no worries. Who said that? Okay, okay. Yeah, I'll send it to you. Probably post it on a Dropbox or something like that. But yeah, so basically we were just going over like candle, a little bit candle anatomy, basically what a trend is. Because I know there's a lot of experienced traders in here, but I also know there's a lot of new, like, new traders as well. So to anybody that, and also there's people that just don't know how I trade in general, and it's always nice to even from another good trader to another. Like I like to learn from other people that are experienced as well, because there's never enough knowledge to sharpen your edge. But I say just do what you're good at. And number one, before everything and above all, is risk management. It's gonna help your psychology out immensely. Like, and that's why I was showing you the 50% rule, earlier. I went over that. But yeah, you guys can rewatch the stream. Um, I'll post it and get it up and drop the link in the chat if anyone wants to watch it. To probably leave it up there for like a day and then take it down because I only have so much like cloud storage space. But yeah, we pretty much went over everything. We're just chilling. How did everyone do this week? Do you guys have, by the way, does anyone have any questions? I don't know uh, if you do, don't feel shy to ask. Um, just be respectful. That's all. That's all I ask. You just I think there's an option in there to add another. Like, yeah, yeah, there's an option to add another. Like, you don't have to open another account like in itself. Just opt. Yeah, yeah, you do it on the same one. So, oh, this one's a 25. Yeah. I think I just got this maybe like about a week and a half ago, and then and it took me a week to get funded, and then actually it was one trade that really got me funded. So, so I've only been with this. I'm sorry, I don't know what that is. No, I try to just stick with what I know. I mean, I will take into other things into consideration like order blocks, but again, Jordan is better with ICT than I am. Like I'm more of a strat trader, but as far as the order block is concerned, it's going to be the three candle from what I understand, and then the third candle, like if you see like three consecutives like this, your order block is going to be like from this wick to this wick right here. So it would be something like this. Yeah, this is how I so this is how I yeah. Yeah, and I'll add to that, like, I second that, and what is important that he's getting at is like you need to trade within what you're comfortable with. Like everybody, we all have a different genetic makeup, we all have different circumstances, we all have different account sizes, it's non-comparable. We all have different experience levels. Trade with what you know and trade with what you know works for you. Whether it's EMAs, I mean, there are people that just make money off of fucking EMA crosses. That's all they do. It works for them. That's how they trade. That's how they like to trade. So I'm all about probability, in risk management. That's how I base my trades. And also I would say like don't try to learn everything at once. Learn one thing at a time until you become fluent at it, because you're just going to overwhelm yourself. It's going to be contradicting. It's like, oh, well, I saw this, but then there's this. So just learn one thing at a time. Like if you can identify, for example, what a trend looks like, if it's an uptrend or a downtrend, where's your higher low, where's your higher high, so on and so forth. Break of structure, change of character, things like that. What is an indication of a reversal? From there, candle types. What is the candle doing in comparison to how much volume does that candle hold? Because sometimes with VPA, volume price analysis, really can't hide the candle anomalies. Like you can see low volume candles. I mean, sorry, low volume with big body candles and small wicks, and there's little things like that. They have written books on them, stuff like that. But don't worry about overwhelming yourself with all that shit like right off the bat, especially as a newer trader. What you need to focus on is just like learning how to walk first. Like I would say understanding what a trend is, because like I trained my like stepfather on how to trade, and like he would be buying in areas and I'm like, why the fuck are you buying there? Like, and I'm like, hang on, let me show, because sometimes people, it's not that they're stupid, they just don't know how the market works, right? Like you think, oh, because it's moving up, that means I need to buy now because but that's not, as a matter of fact, that is not always the condition. And so, I mean, yeah, sometimes on candles like these, like I will buy into, um, I mean, yeah, there's always those three scenarios, right? We can go back up and test the high. We can come back, set a new low. But first, before we did that, we also did test a high. So what my anticipation is, we might come up, we might test previous day high, might hit the zone. Hell, we could even break out and go mooning. Also, but based on you know my experience and probability from the amount of times that I've been back testing and doing this, it will either consolidate in this area. Uh, my assumption would be to like, if I were to go long, um, I'd want to see this level hold right here, first of all, because anything below this, yeah, anything below this right here, where I drew that order block, like it's dumping right here, back to the 1.272. If you decided to go long off of this, then your next upper target would be here for my next upper target. So after running this low here within this golden ratio right here, within this is another golden ratio uh, on a larger time frame. So after running this area here, it might swipe down. It could sweep it. We could do one of these. Obviously, we've been chopping around like this for a while. It could go up here, try to test this high here, come down here, test, check it, boom, take that low out, and then come check this one here, and then either continuation or start running highs again up here, or begin to run highs. So this is kind of like the move that I see. Uh, but yeah, I do think it is still very bullish, obviously. If in fact it does get red, uh, yeah, you better be fucking ready for it because uh, we've been trending up again on the weekly. I'm not gonna delete those right now. Like we've been making higher again. I marked them. We have these. We have a low. We have a higher. We have a high. We have a higher low. A higher high. A higher low. So to get back to what I was saying, like it's kind of hard to see because of all this shit. And then we just made a new high. So we're now at a higher high, right? So so either we come back down here to pull back and retrace and move up again, or we start taking out larger time frame broadening formations. So we start taking out this low, right? And then we come back and either this support holds here, right? 50% of this range here. So it would be somewhere around here. If that doesn't hold, we could come back and do this again. Like so if this didn't work out, like we came back, start and it just didn't, we could start heading this direction. Like if it shut the bucket or shut the bed or whatever. Start doing like that could be the first move right there. After that, no, no, I don't. And then no. I mean, I have I more so base it on probability, but I don't have a strong bias, man. That's why that's why what I'm talking about, I'm considering like all three scenarios right now. So this is the larger time frame scenario because of the fact that we've been placing all year just bullish higher highs and higher lows on the weekly. So this could very well happen. If this does happen, it probably will retrace back to here, more than likely, because again, high, low, retracement, test, high, again. So we have another one here. This is your new high, comes back here, and then shit, I can't. Yeah, so and then we have your other. Well, so let's just say this is all one line, okay? So there's that, and then we have this pullback here, and so this is a little concerning right here. But then again, it swept it, and then it did make another higher high. So right now, that's what I was saying as far as why I don't feel extremely comfortable about trading this is because, again, market structure wise, what does that look like to you? Well, do you know what a head and shoulders is? Yeah. So this could also be a scenario right here. Oh, yeah. Well, that one's kind of fucked, but yeah, I mean, you get the point. So, I mean, that didn't happen. This has not played out yet, but this is a scenario. Okay. And then after that, we check this low here. But again, we're looking at the weekly, so this would be by November. You know, this is like way out. But you also have to like when I trade, time frame continuity is fucking huge. Like it's yeah, it's a pretty big deal for me. But yeah, I mean that's pretty much all I have. Um, As far as keeping a bias, no, I don't. Because I'm just always watching price action, and I'm not the one that tells the market what to do. It does what it wants. Uh, I'm not in control of that. I can only do my best to stay on the right side. You know. So I hope you guys found this useful. I'm probably gonna hop off. I feel like I've been talking for a while now. But yeah, if you haven't seen this, you're good. Uh, how do I delete that? Okay, I'll do all that later. Anyways, but yeah, that's pretty much all I have. That's kind of what I wanted to go over. Not so, I mean, again, not giving call outs, not doing any of that. More so showing you how I traded this week. There was a day that I just was sniping right at, I think it was supply, uh, and then I got out on the 1 minute. But I don't recommend doing that first starting out. Definitely don't recommend doing that. Um, but yeah, overall, I've had 5 out of 5 today, this entire week. I've been green, so uh, my win ratio on average, I'd say it's pretty decent. But yeah, I mean, I don't really like to like say I'm, some kind of a furu because I'm not. There are things that I learn every day as well. There are things that I need to focus on. I'm just sharing the knowledge that I have. Yeah, you're welcome, guys. You guys have a good weekend.